Friday, April 15th, tax day. Let's not go into that. Markets were haywire in the first 3 months of the year, not just in the United States, but everywhere. Not just the stock market, but everything. And we've gone quiet. And as the copy near this video says, it reminds me of the old cowboy movies of my youth when John Wayne would say, "It's quiet out there. It's too quiet." And we go into periods of quiet like this, and then, unless something has changed, we go back into volatility, and nothing has changed. The issues that were before us in the first 90 days of the year are still here. One of them is off the table, which is the Fed. The catalyst for the chaos early this year was the Fed's first tightening move, and not so much the first tightening move as the threat that there'd be a long string of them. That's off the table, that's gone. But if anything, conditions overseas have continued to deteriorate and underperform. The outside world is Europe, it is China, it is Japan, and a collage of emerging nations. And Europe is in trouble because of the common currency. It's in trouble because it's getting old, but it's a very durable place. It has a great deal of social capital. The individual nations in Europe believe in themselves. They have good systems of law and governance. So it's not likely to be a catalyst, although Italy and Spain, Italy and Greece and Portugal are toast, and Spain's in the oven. But it's not quick. It's not going to recover either. Japan is over the edge, over an edge from which it cannot recover. But it's one people. It's a very durable place. It's a very disciplined place. There's no telling how long it could hold itself together, even though at some point it's going to wind up defaulting on its debt. The China and emergings thing, the emergings are in a lot of trouble. Brazil no longer has a government. Brazil's economy is shrinking fast. Venezuela's done. South America's in trouble. But these are not big places that are going, even a bad accident in one of them is not likely to be a tip-over event for the global economy. So all eyes are on China, and China's opaque. So go figure. But the essence of China is the rebalancing that must take place inside China is failing. Their first tries at opening the economy on a market basis, they had to retreat from. They're trying some new ones now, but all they're doing is moving something from box A to box B to box C, but it's all the same set of risks and the same set of events. It's the big deal ahead in the next few days. This weekend, the IMF and World Bank meet this weekend, and coming out of it may be some change in efforts overseas to rescue economies, or not, but all eyes are overseas. Here at home, the data is a little soft in places, but interest rates are dead low, the housing market is still in a good recovery, the unemployment rate is low, and nothing to complain about. And except for being tax day, have a nice weekend.